Hey guys, welcome back. Into this video, we are talking about why banks are buying AMC, how the Moass is coming, the shorts unwinding AMC swaps, and many more in this video. First, we're taking a look at this. Banks are buying up AMC in large quantities, along with more other small hedge funds and state pension funds. So if you take a look at what we've seen recently, we had Bank of New York, we had Citigroup, we had BlackRock, all buying into AMC along with other institutions as well. Now, this should already be a big indication of what's to come for AMC. This should already be a very good indication of what the actual prospect on AMC is. We've said this countless times before. No matter what the media article is telling you about AMC, whether it's going to go bankrupt, whether you should not buy, whether you should sell, those have always been for the sole incentive and purpose for people to sell their AMC shares. It isn't for the benefit of the retail. Because if you take a look at what the actual quote unquote smart money is doing, or at least these big capital institutions, they are all buying into AMC. Why would they buy into a company if it's going to go bankrupt? Why would they spend hundreds of millions of dollars into a company if it's not going to yield them a great return? And so when we take a look at everything that's ongoing right now, it's already a big indication of what's to come. But there are also a few groups within here that we need to talk about in terms of why they're buying in. Now, some of the companies mentioned, like Citigroup, like Bank of New York, BNY, the long buys are hedging their unclosed short AMC positions. It's bullish as banks are now netted long like big hedge funds. They expect AMC to go much higher. We are close. So going back to what we said earlier as well, some of the firms we've mentioned, such as Citigroup, now we should be familiar with this name because they're one of the first institutions we've mentioned with synthetic shares of AMC. For the ones who have been here for a long time, you will know about the Brazilian ADR shares that we talked about on AMC and how Citigroup had the entire float of AMC in Brazilian ADR shares. Now, the fact that we are seeing them buying into AMC right now, despite the fact that they've given AMC a lower price target, despite the fact that we have seen short positions on AMC buy them, I think that already tells you a lot about what's going on. The fact that they have to hedge their position, the fact that they have to long AMC, it just shows that they are afraid about what's to come for AMC. And so they are trying to position themselves in a sense where when AMC rips, when AMC explodes, they aren't going to lose as much money as they would previously, because previously they were fully net short and it would just mean that they will completely lose money. But now, as we see them trying to go long, as we see them actually move to net long, we're going to be seeing them potentially make money. But for the shorts who have created the synthetics, for the shorts who have been here too long, no matter what they do, whether it's on the books they show that they are net long, they are still going to lose money because at the end of the day, they have shorted billions of synthetics of AMC. But I think it's a very good sign that we are seeing these banks to start buying into AMC and to go net long on these positions. And it really is just a big thing. And it really shows how they know that they are cooked. They know that the naked shorts are in a position where they can't recover anymore. The market makers know it, the brokers know it, the DTCC knows it, the exchanges know it. And these are all indications that have already been shown. The reason why I say this is because recently we talked about how we are seeing they are not allowing brokers to process shares like GME warrants, or they're letting individual brokers and they're not trying to back them anymore. We're seeing how certain market makers are taking up more positions. We're seeing how they're not having enough liquidity. There have been so many signs of what's ongoing in the market right now to show how there's a lack of liquidity, to show how there's a worrying margin problem. And this is ultimately what we said with how the naked shorts are starting to get to them. The positions that they've created that has become so big is starting to make them lose millions, if not hundreds of billions of dollars that is ongoing right now. And on top of everything that we're seeing, how these market makers are not in a good position, how the shorts are not in a good position, how the brokers are not in a good position, AMC is on the complete opposite. We are doing better than ever, and we're seeing even more kind of exclusives. We're seeing even more catalysts coming in for AMC, where Paramount has agreed to sign contracts with major theater chains, guaranteeing that it will release 30 movies a year in cinema if it acquires Warner Bros. And we're seeing how they have offered a 3-year agreement to AMC and Cineworld, the world's two largest theater chains, requiring it to release the films exclusively in theaters for at least 45 days. Now, this is what we've said with the opportunities that are coming, with how AMC is only going to get bigger. We're getting exclusive contracts, we're getting more movies to be released, and these are all major things, because at what we are seeing right now is that even when we do see these deals happening, it's not even the full benefit of what AMC can get, but what it means for the potential, what it means for other partnerships to come along with that. And on top of this, it's showing how the fundamentals, the earnings of AMC is ultimately going to get even better than what we can expect. And this is what we said with how we're one step closer towards buyback. We're one step closer towards dividends, and ultimately one step closer towards the squeeze of AMC. And if we talk about in terms of the exclusive deals, in terms of the increase in movies, we have to understand, Adam Ammer has already said this in the past before, and I keep repeating this, but it's very, very important, which is we don't actually need the box office to come all the way back up to pre-COVID levels for AMCs to be delivering pre-COVID levels of EBITDA. And again, the reason why this is important is talking about how AMC is becoming more and more efficient. So even if we're at a constant box office, the fundamentals of AMC is still going to improve without the box office improving. Now, this isn't to say we don't want the box office to go up, because obviously we do, and that's precisely what these deals are offering. So not only are we seeing AMC become more efficient, but the box office is going to get even bigger, meaning that the multiplier effect, that the revenue, the profit we're going to be seeing isn't just going to be a linear increase, where in my opinion, I do think it's going to be exponential. And we're really going to see explode the moment we see these things happening. Remember, AMC is still opening up new theaters in profitable positions. They are still wanting to close down the less or unprofitable positions. And all of this is all going to compound. And you're ultimately going to be seeing how AMC is going to grow to an even bigger powerhouse than we are right now, and how we're going to get even more market share than what we're seeing. And so when we talk about profit, when we talk about EBITDA, when we talk about the revenue, we're all going to be seeing that increase for AMC. And that's ultimately what we want to know. And I do think that Adam Aron is positioning himself for this moment. Like I said, it's very likely there's even more exclusive deals that he has with Paramount, or at least we're seeing that he has more left in the bag. And the reason why I say this is because he sees the opportunities there is for AMC right now. You can see Adam saw the biggest 3-year run in box office history, 26, 27, and 28, and decided to strategically push out the debt to 2029. So we have no debt payments until 29 and can now focus on playing Monopoly. Profits, increased cash on hand, more money to fund capital expenditure. And all of these are very, very important, because ultimately right now, we don't have things holding us back. If we talk about how AMC can grow as big as you can without any setbacks, this is the moment. And if we're going to be looking at AMC kind of allocating their capital into what we talked about with premium screens, what we talked about with profitable theaters, or any other revenue streams, they are all able to do this without needing to worry about a never-ending payment, what was previously the debt. And ultimately, we said that even then, that's not a major problem. But it's now we have the free of mind to do all of this. And I think the most important takeaway point from this is the fact that Adam Aron sees these 3 years as the golden opportunities, kind of the golden years for AMC, and he's really trying to capitalize on this. So when we talk about, do I expect AMC to yield massive, great returns within the next 3 years? Yes, I do, because we are taking the full opportunities of everything that's ongoing. And so a fun fact is that if AMC was going bankrupt, institutions wouldn't continue to pile in. Follow your own plan. You don't have enough shares to impact price. And this kind of just sums up everything. We shouldn't be worried about the short-term price, nor should we worry about, what's going on when we're not buying as much as we can. Because at the end of the day, we have already bought up the float. We have been forcing the shorts to create synthetics for the last 5 years. But more importantly, the reason why we shouldn't be worried about the short-term price is because if AMC truly had no potential, if AMC truly was going bankrupt, going back to what we said at the start, you wouldn't be seeing these companies all buying into AMC. And this is how we know that we are in one of the best opportunities of our lifetime right now in terms of the potential return, in terms of the yield, in terms of everything that's ongoing. Because when AMC is delivering the returns that we are seeing, you're going to be looking at buybacks to bring up shares. You're going to be looking at the fundamentals to reflect the price. You're going to be seeing the dividends being issued out. And then ultimately, you're going to be seeing the squeeze in AMC. So many different ways for AMC to be the golden opportunity of this generation. And that's what we're seeing right now. And it's why these institutions all want to buy into AMC. And just as we talk about the earnings, the fundamentals of AMC, remember Spider-Man has done extremely well. And we're very likely to be looking at a potential another press release from AMC, whether it's about the revenue and or attendance. And remember, whilst one of these aren't important in terms of if we just see it once, it's not important. It's very important to know that if we see it consecutively breaking records, it's going to reflect in the Q3 earnings. And what we're going to see for the Q3 earnings is the same as we saw for Q2, which is it's going to be the best ever earnings. And we're then going to see how that's going to translate into Q4 and then Q1 of next year, Q2 of next year. And it's just never ending of how AMC and how successful it is. So this is what we have to understand with how these news, whilst if they just pop up once in a while, it's not as important. But if they consecutively pop up, they are crucial to understand just how well we're navigating. And if we take a look at here right now, is that August is about to break all-time box office records. AMC has 750 million in cash and will most likely add another 200 to 400 million in Q3 unless they decide to do something different. And what we have to understand is, just like we've said, if they invest their money well, whether it's into things like premium screens, profitable theaters, other revenue streams, these are all things that AMC can do. And it doesn't matter if it doesn't reflect in the cash on hand, because as long as they invest it and it yields a great return, that's ultimately what's going to allow AMC to grow. And just like we've said, we are seeing this happening. And so for the trolls who keep saying that AMC isn't a short squeeze place anymore because reported short interest is minimal, reminder, that number is self-reported. And I think it's very important to remind this again, because we've already talked about with the swaps. We talked about how at the end of the day, these swaps are offshore and they don't have to be reported, along with the offshore shorts of AMC that aren't in swaps form, along with, at the end of the day, self-reported. So even if they are shorting it, they still don't have to report it. This is what we said with how we're not worried about what they're showing us with the number on ortex or on whatever. Because when we talked about the ticker symbol CAR, when it squeezed, it was nowhere near a short squeeze, short interest, yet it's still squeezed. And so this is how we have to understand that it doesn't matter what number they're trying to give to us. And the very fact that people are talking about this number is just showing how the institutions are manipulating it and is trying to force people to believe what's not true. And so this is how we know that institutions is still ongoing, trying to manipulate people, trying to prevent the squeeze. But at the end of the day, it is going to happen because of everything that's happening right now with AMC. And then one of the biggest things that have shown this in the past was, of course, ape shares. And if we talk about the potential of ape shares, the fact that it still exists in other exchanges, it already talked to you about the manipulation. But when we talk about a potential of what it meant about maybe some backroom deals and what it can do now, is that potentially there were deals being made to make AMC squeeze now. Now, this is, of course, a tinfoil hat moment. This is something that is just up in the air. This is what we see in terms of what people are saying. But it wouldn't surprise me to know if Adam Aaron has made deals in the past before, which with a longer kind of sight in mind to allow AMC to squeeze now. Now, this is again all up in the air, and as always, none of this is financial advice, so I'll catch you guys next time.